Oil flirting with $100 a barrel is back on the radar. Here's what that means for Asia-Pacific markets and your portfolio right now. Markets across Japan, South Korea, and Hong Kong moved in different directions as investors weighed energy prices, geopolitical risk, and the fast-approaching first-quarter earnings season. The core issue is inflation pressure. Higher crude can lift input costs and consumer prices, which complicates central banks' path toward 2% targets. That, in turn, influences policy rate expectations and the discount rates used to value stocks and credit. The latest spark is heightened U.S. Iran tensions, which have boosted the risk premium in oil. When crude sits near triple digits, energy producers often see stronger cash flow. But fuel-intensive businesses, from transportation to logistics and select manufacturers, can face margin stress if they cannot pass costs through quickly. This split helps explain today's mixed indexes and the tilt toward energy-linked names and select defensives. Positioning for earnings is another driver. Investors are rewarding companies with clear pricing power, resilient supply chains, and hedged energy exposure. Firms that rely on cheap fuel or have weak pass-through dynamics are seeing more scrutiny. Guidance on fuel costs may be a swing factor for both Q1 and full-year outlooks. Rate expectations are also in motion. A stickier energy backdrop can slow disinflation, pushing markets to reassess the timing and pace of potential rate cuts. Even small shifts here can ripple through equity multiples, bond yields, and currency moves. Add in a higher dose of headline risk, and intraday volatility rises across major benchmarks like the Nikkei 225, the Kospi, and the Hang Seng Index. So what can investors do? Focus on balance sheet strength, pricing power, and the ability to manage or hedge fuel costs. Stress test holdings for higher energy scenarios and slower disinflation. In equities, consider whether exposure is tilted toward upstream energy and select commodity beneficiaries, or toward sectors that may struggle if fuel stays expensive. In all cases, let earnings updates guide decisions rather than reacting to every headline. The bottom line, with oil near $100 and event risk elevated, markets are rewarding resilience and discipline. Keep your playbook flexible, prioritize quality, and watch how management teams talk about costs and margins this quarter. Read the full article at finlitica.com. Quick reminder: this is general information, not financial advice. Your money, your decisions, so always do your own research.